Welcome back to our channel, my fellow traders. It's always a pleasure to have you here as we journey together through the fascinating world of trading. Our goal is simple yet powerful: to equip you with the knowledge and insights you need to thrive in the market. Whether you're just starting out or looking to refine your trading skills, we're here to provide valuable content that deepens your understanding and widens your horizons. So, let's dive right into today's adventure and explore a snippet from the enlightening book, How to Make Money in Stocks by William J. O'Neill. But before we jump in, don't forget to hit that subscribe button and ring the notification bell to stay connected with our trading community. Together, let's make your trading journey an exciting and successful one. Segment 1: The Foundation, CANSLIM Strategy. So, you know how every journey needs a strong foundation, right? Well, the stock market journey is no different. We've got this golden strategy called CANSLIM, which is like our compass in the trading world. It breaks down to key factors: current earnings, annual earnings, new products or services, supply and demand, leader or laggard, institutional sponsorship, and market direction. It's like our roadmap to finding those potential winning stocks. Let me explain further. C. Current earnings. This is all about focusing on companies with strong and recent earnings growth. The idea is to look for stocks where the earnings per share, EPS, have increased significantly in the most recent quarters. When a company consistently shows robust earnings growth, it often indicates a healthy and thriving business. A. Annual earnings. Alongside current earnings, you want to ensure that the company has a history of strong annual earnings growth over the past few years. This helps you identify companies that aren't just having a short-term boost but are consistently performing well over time. N. New products or services. Companies that introduce innovative and successful new products or services tend to stand out in the market. These offerings can create excitement, attract customers, and boost the company's revenue and earnings potential. S. Supply and demand. This principle relates to the balance between the supply of a company's stock and the demand for it. Stocks with limited supply and high demand tend to experience price appreciation. This can be influenced by factors such as the number of shares outstanding and trading volume. L. Leader or laggard. It's important to identify whether a company's stock is a leader or a laggard in its industry or sector. Leaders are often the companies with the strongest growth, highest market share, and innovative products. Investing in leaders increases your chances of being part of a winning trend. I. Institutional sponsorship. Keep an eye on institutional investors like mutual funds and pension funds. When these big players start buying a stock, it often indicates a high level of confidence in the company's growth prospects. Institutional sponsorship can drive significant price movements. M. Market direction. The market's overall trend can greatly impact individual stocks. It's essential to trade in the same direction as the general market trend. If the market is in a strong uptrend, it's more likely that individual stocks will follow suit and move upwards. In essence, the CANSLIM strategy is a holistic approach to stock trading that takes into account both fundamental and technical factors. By looking at various aspects of a company's performance and market dynamics, you're aiming to increase your odds of selecting winning stocks and optimizing your trading decisions. Remember, while CANSLIM is a powerful tool, it's important to combine it with your own research and analysis. Each element of CANSLIM contributes to a comprehensive view of a stock's potential, helping you make informed and strategic trading choices. Segment 2: The Art of Technical Analysis, Chart Patterns. Alright, buckle up. We're diving into the world of technical analysis. Imagine stock charts as these intriguing puzzles that tell a story. Example 1. Cup and handle pattern. Imagine you're researching a stock, let's call it Company X. As you look at its chart, you notice something interesting: a cup and handle pattern. The cup part shows a gentle rounding bottom, indicating a period of consolidation and a potential base building phase. The handle is a shorter consolidation near the top of the cup. This pattern suggests that the stock is gathering momentum for a potential breakout. Now, let's talk entry. As the stock's price starts to rise and breaks above the high point of the handle, that's your signal to consider getting in. It's like the stock is saying, "I'm ready for the next leg up." This breakout is often accompanied by increased trading volume, indicating growing investor interest. For exit, you'd want to keep a close eye on how the stock behaves after the breakout. If the price continues to climb, that's fantastic. However, if you start to notice the stock struggling to maintain its upward momentum, it might be time to consider taking your profits and looking for the next opportunity. Example 2, double bottom pattern. Let's switch gears to another chart pattern, the double bottom. Imagine you're researching company Y. As you study its chart, you notice a distinct W-shaped pattern. The first, bottom, represents a price drop, followed by a temporary recovery before another drop forms the second, bottom. This pattern suggests that the stock could be finding strong support at these levels. Now, for entry, you're on the lookout for a breakout above the middle peak, the high point between the two bottoms. This breakout could indicate a shift in momentum, potentially leading to a bullish move. As for exit, keep an eye on the stock's behavior post-breakout. If it starts to lose steam and struggles to maintain its upward trajectory, it might be wise to consider taking profits or tightening your stop loss to protect your gains. Remember, chart patterns are like clues left by the market, and they don't guarantee success every time. It's important to combine your analysis of chart patterns with other aspects of trading, like market trends and fundamental data, to make well-informed decisions. By mastering chart patterns like the cup and handle and the double bottom, you're adding powerful tools to your trading arsenal, increasing your ability to spot potential opportunities and effectively time your entry and exit points. Segment 3. Timing is everything, market trend. Moving on to timing, the heartbeat of trading. O'Neill talks about the importance of riding the market trend, kind of like catching the perfect wave. Imagine the market's like this river, and we're paddling along with the current. Now, when the market's in an uptrend, it's like catching that wave just at the right moment. And finding our entry point? Well, it's all about spotting those high-quality buy signals, like a double bottom pattern during a market uptrend. But remember, knowing when to exit is crucial too. If the stock starts to lose steam and the market trend seems to be shifting, it might be a sign to consider taking our gains and looking for the next opportunity. Segment 4, Risk Management, Stop-Loss Orders. Let's talk safety, risk management style. It's like having a safety net as we perform our trading acrobatics. Picture this. We set up a stop-loss order, which is like a protective shield for our investment. It's the level at which we say, "Hey, if things go south, I'm outta here." So, if the stock price reaches that level, we're automatically out of the trade, preventing any major financial falls. It's all about safeguarding our capital while enjoying the thrill of the trading ride. Segment 5. Psychology of Trading, Emotions and Discipline. Last but not least, we're tackling the psychology of trading. Now, trading can be an emotional rollercoaster, right? O'Neill offers some fantastic insights to help us keep our cool. Think of it as our emotional compass. When things get intense, and we feel that urge to panic, discipline steps in like a calm voice, reminding us of our game plan. Whether we're facing a downturn or a skyrocketing stock, having that discipline can help us make rational decisions and avoid impulsive moves that could lead to regrets. And there you have it, my trading buddy. A taste of the incredible wisdom waiting for you in How to Make Money in Stocks. From decoding the CANSLIM strategy to mastering the art of market timing, we've covered a lot of ground today. But remember, this is just the tip of the iceberg. If you've enjoyed this journey as much as I have, I'd be super grateful if you could show some love. Hit that like button, smash that subscribe button, And don't forget to share this video with your fellow trading enthusiasts. Together, we can spread the knowledge and help more people deepen and widen their understanding of trading in the market. Oh, and before you go, I've got a little treasure trove waiting for you on our channel. We've got more exciting videos lined up, each designed to take your trading game to the next level. So, don't forget to check out our other content and hit that notification bell so you won't miss a thing. And hey, I'm all ears. If there's a specific book you'd like a quick summary of or any other topic you're itching to explore, drop a comment below. Your feedback drives our content, and I'm here to make sure you get the trading insights you're craving. Thanks for hanging out with me today, and until next time, my friend, happy trading and keep those curious minds alive.